My topic for today is how to calculate AMT or alternative minimum tax. Education builds a nation and education builds your reputation. Therefore, focus on education. Hi, this is Nashimur, the CEO of InfotechSquare.com. Professionals and students who want to enhance their knowledge should sign up with Climb as I suggest. I also request that those who watch our videos subscribe to our channel to receive up-to-date taxation information in their email. Why should you subscribe to our channel? We are a team of CPAs and EAs who develop content based on Congress, IRC, sections and IRS publications. I'm going to cover in this topic alternative minimum tax objectives, AMT objectives, AMT exemption amount, difference between tentative tax and regular taxes, and the role of AMTI, alternative minimum taxable income. I'm going to start with the objectives of alternative minimum taxes. What is the objective of an alternative minimum tax? The AMT is a parallel tax system that is designed to make sure that high-income individuals, corporations, trusts, and states pay a certain minimum amount of tax. The initial aim was to prevent wealthy taxpayers from employing deductions and credits to avoid paying taxes. To put it simply, it is a distinct tax calculation that has different rules for claiming deductions and excluding income. The additional tax must be paid if your AMT liability exceeds your regular tax liability. Now, what is the AMT exemption amount? The amount of income that does not have to pay alternative minimum tax is known as the AMT exemption amount. The exemption amount for 2024 tax year are outlined here based on the filing status. For single and head of household, it is $85,700. For married filing jointly and surviving spouse, it is $133,300. And at higher AMT level, the exemption will begin to phase out. The AMT is the difference between. What is the AMT? The AMT is the difference between the tentative minimum tax and the regular income tax. If the tentative income tax is 26% up to $232,000, the tentative income tax rate will be 26%. If the income is up to $232,600 for 2024, if the income exceeds to 26 or 28 to any, if the income exceeds to $232,600, the tax rate would be 28% of any additional taxable excess. So basically, we have learned so far three things. Alternative minimum tax, which is an additional tax to the regular income tax. Second, AMT exemption amount. The Internal Revenue Service has allowed to reduce the AMT taxes based on the filing status. If you are single, you are head of household, married, whatever, accordingly, you will apply the exemption, and the tentative minimum tax and regular tax is a combination of AMT. Now I am going to explain it with an example. Derek has a taxable income of $238,000 on his individual return, while his AMTI before exemption was $242,000. Derek AMT is calculated in the following manner. So based on Derek information, Derek has $238,000 taxable income and AMT alternative minimum taxes. He has $242,000. Based on these two information, we have to calculate whether he is subject to AMT or not. So we'll start with Derek's AMTI. Derek AMTI is $242,000 alternative minimum tax. Secondly, we need to find out AMT exemption based on his filing status. Derek is a single, therefore AMT is therefore the exemption amount is $85,700. Now we have Derek AMTI, Derek exemption amount, so we can calculate the taxable excess amount. Therefore, the excess taxable amount is subject to AMT tax at this moment which is $156,300. The combination of $242,000, which is the AMTI, minus the exemption amount, which is $85,700. So the taxable excess is $156,300. We have the AMTI, which is $242,000, which is already given in the example. We know the exemption is direct is a single, therefore we have exemption of $85,700. Now what is the taxable excess? Taxable excess is $242,000. Like how much on what income do we have to calculate the AMT? So is AMTI is $242,000. We have to reduce it with the exemption amount, which is $85,700. Now we have taxable excess of $156,300. Now we have to find out the tentative minimum tax. Thus the minimum tax for AMT purpose is $40,000. So his tentative minimum tax will be $40,638,000. That we have to calculate based on 26%. As we just read, that if the amount is $232,600, the tentative tax rate is 26%. If it is above, the tentative tax rate would be 28%. Since $156,300 taxable excess is lower than $232,600, therefore we'll apply 26%. So the tax will be, the tentative tax would be become $40,638. So now we have to find out the regular income tax. Based on the IRS table, the regular income tax would be $53,846.50. Now we have to compare between tentative minimum tax with the regular income tax. If the regular income tax is above the tentative minimum tax, then there is no AMT applied. So in this question, in direct situation, the regular income tax of $53,846.50 surpasses the tentative income tax of $40,638. Thus, direct income is exempt from alternative minimum tax. I have two notes here regarding $191,950 and $39,110.50. These two amounts we have taken from the IRS table. So in the example, the threshold of direct income to fall into the higher tax bracket is $191,950. At that point, the tax calculation changes, and income over $191,950 will be taxed at a different rate than income below that threshold. So these two amounts, $191,950 and $39,110, we have taken from the IRS tables. I thank you for staying with me, and God bless you.